Hello, everybody. Hope we're all having an awesome weekend. This is 50 Pips, rocking and rolling. Welcome to a new month, 2nd of November, 2014. Not making any trade calls or recommendations because you and only you're responsible for the trades you may decide to take. The fact that you're in here means you've read, you understand, you accept. All the disclosure disclaimers here on the website, and we're also understanding that we're just performing some live tech analysis in a learning context for educational purposes only. So what's going on? What's going on? We had an interesting end of the month. Recently the ends of months have been pretty interesting, a lot of volatility. And now we're going into November. Now keep in mind that this is going to be a pretty interesting week with most likely a lot of volatility. So basically we've got stuff going on every pretty much every day, right? Quick look through the calendar, you'll see basically we've got Australian data already in the overnight session. We got China, the PMIs coming out tonight. Then we've got all the PMIs, out of Europe, out of UK, out of the US on Monday. Tuesday, we've got more Australian data. Then we follow that off with a rate decision out of Australia. We've got the construction PMI, the Halifax, the Spanish employment numbers, trade balance out of CAD and out of US. BOC governor on the speaking. We've got employment rate in New Zealand, and that's just on Tuesday, right? That we haven't even gotten to Wednesday yet. Wednesday, we've got Karuta on the wires again, so that should be interesting. We got all the services PMIs. We got ADP in the US. So again, and we're only through Wednesday. Then we get to Thursday. We got unemployment data out of Australia. We've got, man production out of the UK. We got a rate decision out of the UK. We got a rate decision out of Europe with press conferences. Then we got the PMIs out of Canada, and then as if that weren't enough, we got a monetary policy statement out of the RBA on Friday. We got unemployment claims, non-farm. So again, it's a action-packed week. There'll be a lot of stuff going on. So clearly, a week to stay under control and to be very, very to be very cautious. Understand that there will likely be a lot of volatility. With a lot of volatility means possibly a lot of opportunity, but again, also a lot of risk. So you want to keep that in mind. There's always two sides to every coin, right? Where to start? Now, this last week we only did Forex, so I want to do Forex and futures today to start off the week because it's going to be an interesting one. So I think the first place to start, really, we have to start on the equity side, right? So we've got equity side ES all the way right back into those highs through the 2000 level. Very aggressive move. If you remember what we said after we had that move down, everybody started talking about it's the end of the world, this is going to tank, this is going to tank. And what we said, well, really what we felt is that as far as we like to focus 99% of the time on technicals, unless something significantly changes in terms of rates, etc., likely we'll continue to stay bid. And also this basing pattern here with all these wicks, led us to believe that trying to get back short on moves back into the 200 DMA and into this 50 back zone was a bit of a lower odds trade. If anything, the 78.6 would be more interesting, but this looked like it was going to try at least and make it back into the 78.6. Then this was an aggressive move. I think nobody was really expecting this to take place so aggressively, but we're right back into those highs. And if you look at, the weeklies or the monthlies rather, very aggressive closes on the monthlies, right? So again, it looks like everything's pointing to the fact that if they fail, they will likely have to fail from a higher level, right? To the upside here, there's really, it's anybody's guess. I think we're pretty much just talking about psychological numbers and psychological levels. So I'd say, 20, 50 to the upside right here, any retracement, I'd be focused on this whole area. So going into the week, how will I be looking to play this? I'll be looking to tactically trade small shorts on failures around these highs, possibly for intraday scalps, maybe to see if I get something running. But overall, the outlook hasn't really changed. Definitely not want to open big swings at highs. Definitely, just because of the way it is, you can't fight the market. If you're holding long exposures, try trimming it back, but I'd still, try and hold some. And looking for opportunities to play. But unless something really significantly changes from the Fed or across the board, it's probably path of least resistance will probably be higher. We can debate whether it's about monetary policy and whether it's good or bad or whatever, but the chart doesn't really care about that. And that's pretty much translated across the board. Even if you look at the monthly close, look at the way NASDAQ closed. If you look at the monthly close on on the NASDAQ too, very, very aggressive to the upside, right? So it just continues, as we've been saying on Twitter, it's just that pain trade that continues, right? So there's no real change in that. Also on the DAX, as we said on the DAX, once we got this weekly reversal right here at the 100, we say, you know, heads up here, as long as we start getting a close above this 100 DMA, right? And if we get the next weekly close above this low, this support, right? If we get that second close above there, then we're looking at this to grind higher. And if you're looking to short, if you have to short, most likely you'll probably want to wait to get a better price, because this descending trend line or those highs will likely be attracting, you know. So this is where the game is being played right now. We'll have to see. Really no mood to try and be aggressive, no mood trying to be aggressive in terms of fighting flows on equities. And as we know, you know, it's never a great day to spend the day trying to fight flows at the end of the month or something like that, right? So really pretty basic, pretty classical action. On top of that, you know, classical, you know, whenever the media starts saying crude's about to die, you know, that's the time to take your tactical longs and get active there. We've got a nice little bounce there off those lows. Again, I think there's going to be a lot of wheeling and dealing on crude. The levels to watch is here. It would be nice if it bounces here and it bases here. I still suspect it needs to trade lower. I'm not really interested in trading this at the moment. I'd be very interested in trading this if it trades lower back into our zone closer to the 75s. If not, I think it's just tactical scalps. I don't think there's an awful lot of edge there, at least for the way we look at the chart. And what's going on gold? So gold, we kept on saying we're stuck in that 1250, 1300, 1200 range. We expected to try and make a move back to the 1250, close above 1250. High odds we try and take a stab back at the 1300 level. As you see, we never got that close back above the 1250 on this daily. We kept on closing below, and then smack again, you know, BOJ, equities, etc., etc. Right here, the only thing I like to say here in gold and what we've been saying is those 1175s are really key. So if we start getting daily closes, weekly closes below there, this could start to trade very, very heavy. The next level we have to the downside are the 1080s. That's a long way away, and that's the 50 back of that huge move if you look at it on the monthly too. Right here, I don't think there's an awful lot of edge. I'd be looking for possible tactical longs maybe if it starts to base here, but again, gold, crude, silver, they tend to put in the swing lows or the swing highs with very violent action. So seeing the way this daily closed, it doesn't look like it's put in a base here. It looks like it might need to test probe lower, so I'll be very curious to see how this trades this week. But again, keep in mind there's an awful lot of event risk this week. Again, what's happening on yen? Well, you know, Kuruda does the trick on the dance floor. I don't think anybody was expecting it to, well, I think about very few people, but we're calling, you know, but the move is extremely technical, right? This is a case where the move is exactly what we were talking about. The move is exactly what we expected, what we were playing for, but it just happened far, 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 far quicker than we could possibly imagine, right? So what it was doing, it was basing here in the blue shaded zone. We expected it to break to the upside, basing, bam. When it came back here, it's a long, it's a confluence at previous resistance, acting as support, descending trend line, acting as resistance, now acting support, and the fib from lows to highs coinciding with the breakout zone. Bam, long, straight into the 123 extension. Pure trade, very nice. Again, I think anybody who tells you they were sure it was going to happen this quickly, probably, you know, crossing their fingers behind their back. I don't believe that. But here, so what to expect. Now, after this move, again, as we keep on saying, it's a sucker's play to try and fight the central banks. There's no edge. If anything, you try and play with them, not against them, right? Now, keep in mind here, simply because of the nature of what happened, simply because of the way, you know, all the pension funds are going to have to keep on buying, you know, they're going to have to increase the exposure to European ETFs, etc., etc. You know, there's going to have to be a lot of yen selling and dollar buying, especially a lot of yen selling and euro buying, right? So don't be fooled. It's not only a technical chart. There's a lot of flows, a lot of repositioning of big funds, pension funds, except that needs to take place. And you know, you have very little edge trying to scalp or to trade against that as a retail trader. Now, again, after such a big move, you know, it's not unthinkable that it would retrace back down into this breakdown zone. But with this kind of move, if anything, you know, path of least resistance could be grind higher. But what would be more normal would be to see some kind of consolidation, some kind of sideways chop around highs, right? Then again, it depends. But we got a lot of data out of the US. We got non-farm payrolls, so shocking data could have an impact on there. But right here, you know, I really don't think there's a lot of edge trying to revenge trade this, or a lot of edge trying to get aggressively long at highs. But, you know, as I said, you know, with this pair, we've traded very rarely. We wait for our opportunities, right? When you get the triple confluence or you get this strong, then you engage. That, you know, those are much high odd setups. And again, I'm not going to go through all the setups because, you know, the charts are on the blog. But, you know, this fake out trade back at lows, we're looking for this CHF JPY to stay in range, right? Comes back down, takes out some tight longs, fake out play, beautiful chance to get back long for a move back up. Again, happens much quicker. You know, it's exactly the same trade across the board, even on Euro JPY. Again, right here, you know, probably see some kind of consolidation here. Depends what happens on Euro, but right now, you know, support's probably going to come in around those 38s. But the next level, if we take out these highs, will be all the way back up into the 145s, right? So that's pretty much not rocket science here, not too complex. What's going out on the commodity side? Well, we've got some gap downs in early Asia on basically on Kiwi and Aussie. So let's look at Aussie quick. It's not showing here. I don't think this is opened yet. Basically closed 88.02. It's currently trading, Aussie's trading 87.50s, right? 87.50. So a nice, pretty big gap down, probably end up filling, right? But no big change here. We've got an awful lot of data coming out. So again, what are the levels to watch this week? Well, clearly to the upside, the resistance that keeps on working is those 88.80s, and to the downside, you've got those 86.60s, right? Unless we're outside of that from a daily close and we see Momo outside that range, it will probably just continue to be very choppy action. That's the range. Don't get confused by velocity of move inside range. Unless we get daily closes outside there, it's probably not going to mean it's just a choppy pattern, okay? Now, if you look at Kiwi, what's going on Kiwi? Close 77.88 right now. It's closed. It gapped down to about 77.40 or something like that. Looks like it's currently trading 77.70s. It looks like it's trying to fill that gap, but it's the same thing right here. You know, it's just a big chop zone. It's just a big chop zone, and the market will likely try and take those levels out, those extremes out into all the releases, into the rate decisions, etc., etc. But unless we see momentum outside those areas, it's just going to be very choppy trading. On CAD, we were looking on the fact that we thought we're going to get a negative close on the monthly, and we thought that would be a very healthy move, and we'd see some kind of retracement back into the 110s or something like that. We clearly did not get that because we closed 112.60. So again, for me, it's really all going to be about how we behave around these 111.90s, so 112s, right? That's going to be the pivotal level to watch for the week. You know, we continue to get daily closes above, then look for this to continue to grind higher. Most people will be looking at 115s, 117s. If we start getting daily closes below, then I'd expect to see some kind of a healthy retracement back down into 110s, 111, 110s. And last but not least, what's going on Euro and Cable? Well, what's going on Euro and Cable? Not an awful lot. What we kept on saying, you know, the chart isn't going to change, and I can't change the chart unless we're outside of the range, right? So much to do about nothing. Extreme choppy area. The two levels we've got is to the upside 27.80s, and to the downside the 24.60s, which is defended by that 25, right? It's the shaded zone. It's been there for 1, 2, 3, 4, 5, 6 weeks, right? And as long as we're inside this range, much to do about nothing. What do we say on the week? The edge is probably fading the extremes, pressing into those lows, playing for the opposite side on failures to break lower, pressing into those highs, getting short for a move back into lows on failures to break higher. That's just the nature of the beast where we are now. So we'll have to see what happens this week here. There we go. It's open. We'll have to see how this moves, right? Clearly, if we get a close, as we've been saying for all this time, if we get a close below those 2460s, we expect this to possibly accelerate very quickly back into the 120s, on the low 120s. As long as we don't get a close back below there, we expect this to continue to try and move back and stay in this range back above those 27s, 80s. We'd expect this to try and break back to the 130 level. So it's just stuck inside that range. So we just have to be patient. It is what it is, right? You can't force the market. The market doesn't care. You want it to break. We want it to break the ranges, right? And exactly the same thing pretty much is going on cable, right? We're stuck here on cable. We said, hold above these 160s. We're looking for 163s. Failure to hold above here, we're looking for 157.20s. And we continue to chop around here, right? We continue to chop around. So as long as we don't get a weekly close back below those 159.50s, very difficult to look for more downside. Right here, it's just consolidating in this area. It's just very, very choppy. Right now, what's happened is we've continued to trade in this choppy nature going through into this week, and most likely, if there's a week where there's a chance that we break outside of this range, this chop range on euro, on cable, on the weeklies, or on those broader chop ranges on the 4-hour, on the Aussie and Kiwi, it's this week clearly, right? Because we got pretty much all the central banks on the wires. We've got a lot of data, and we've got data coming out pretty much every day on the week. So if anything, fingers crossed for this to be the last week where these charts are stuck in these choppy ranges, where we get breaks outside and we try and get some follow through. Okay, so I wish you guys an awesome rest of the weekend, an awesome rest of Sunday, wherever you may be, whatever you may be doing, right? Have an awesome one. Take care. I'll see you guys for London Open. Thanks for listening as usual. Take care. Bye-bye.